Good evening and welcome, ladies and gentlemen, to our final webinar of 2021. I am Widya, head of Hong Kong office at Benham and Reeves, and today I'm grateful to have these fine gentlemen to join me as we talk property and what's next for the West London market. I would like to first introduce Mr. Marc von Grundherr, Director at Benham and Reeves UK, Finn Nixon, Sales Director at St. Joseph, which is part of the esteemed Barclay Group, and Marion Jenkoff from Capricorn Financial Consultancy. Marc will be sharing on the market, property sales and rental market, followed by a detailed introduction of West London's most ambitious master plan by Finn, called the Green Quarter, and finally, some financing tips by Marion. Don't forget that we will also have a Q&A session at the end, so don't hesitate to share your and submit your questions in the Q&A box. So without further ado, can I please pass the mic to Marc?
Yes, good morning, good evening in Hong Kong and in Asia. I'm Marc von Grundherr, I'm a director of Benham and Reeves, and I'm based here in London. So I'm going to quickly today do an update on the UK property market and London in particular. And so let me start with the good news. The UK property market is really red hot right now. And that's down to a few factors. You know, firstly, there were some stimulus measures announced in the March budget, including the extension of the stamp duty holiday, government-backed 95% mortgages, and they were both really key in boosting confidence in the housing market earlier in the year, and it really drove a lot of sales. Secondly, we've still got record low interest rates, and that's really supported buyers' affordability. Even a rate increase that's being discussed at the moment, it's unlikely to have a significant impact on house prices, and I'm sure Marion is going to talk a bit later about that and where he thinks rates are going and mortgages are going to go. And finally, there's COVID. You know, for the last 18 months, millions of people spent most of their time at home. But as things relaxed, there was a huge pent-up demand of people looking to move and looking for their ideal home, you know, with a general desire for lifestyle improvement, meaning that finding their new perfect home became a top priority. And interestingly enough, according to the Office for National Statistics, the ONS, UK house prices have hit a record high. You know, after surging by £28,000 on average over the last year, that's an 11.8% increase over the year to September. And while London's average house price now hit an all-time high average of £507,000, competition amongst buyers, you know, potential buyers to secure their next property is now more than double where it was in 2019, before we'd even heard of COVID. There's especially strong demand for properties with outdoor space, or an extra room that can be used as an office, or a large living room that has space for a work from home office. And we expect the market to remain really buoyant for the rest of obviously this year. It's quieting down for Christmas, but then definitely into the first 2 quarters of next year. And there's no sign of any drop in demand following the end of the stamp duty holiday 2 months ago. You know, and according to Zoopla, the housing market is moving at its fastest pace in 5 years, with sales agreed in less than 30 days on average. Demand is 35%. That's 1/3 higher than the average for the last 5 years. It's important to note the noticeable uptick in buyers in the London market at the moment, with demand rising by 14% as people return to their offices. You know, meanwhile, you look at the Halifax, who are one of the UK's largest lenders, they're reporting that UK house prices in September posted their biggest rise since 2007. That's up 7.4% compared with September last year. And the driving factor is now the chronic imbalance between supply and demand, coupled with record low interest rates, super low unemployment, leading to strong wage growth, coupled with savings that people have built up during lockdown. You know, they haven't been able to go on holiday. They haven't been able to go out and eat. So they've built up savings. And all of these factors are exerting an upward pressure on house prices. The London market is heading for continued growth, with a strong demand both domestically and from international buyers. Restrictions on travel and the resulting reduction in international buyer demand had a far greater impact on London compared to the rest of the UK. And so therefore, as travel reopens and international buyers return, you know, I really think we're going to see the floodgates open and London property prices will rise sharply. You know, that's further strengthened by the domestic demand as people return to the workplace. A continuing trend is going to be the growth in demand of areas in zones 3 and zones 4, those slightly outer zones in boroughs like Ealing that we're going to talk about a little bit later, where we're seeing really strong interest from young families and professionals seeking more space and better value for money. Even with the new working from home initiative that everybody's talking about and being comfortable with over the last 18 months, most people are now going into work for a few days every week. So transport links are really very relevant and important now. Buyers are looking for relatively affordable homes, great connectivity, plenty of green space, you know, all of which investors, so if you're an investor buying to rent out your home, then you need to take these factors into account when you're buying something. So looking at the rental market, meanwhile, demand for rental properties in London has soared. Rental prices throughout London have recorded their strongest quarter of growth in more than a decade. That's an amazing statistic to see. And this is down to a number of factors: the reversal of working from home, the return of overseas students, the return of corporate relocations, and the resumption of international travel are all driving the London market at the moment. We're experiencing unprecedented rental demand across the board, and that's for properties of all sizes, from very small studios up to very large houses. And in most locations throughout London, we're seeing this strong rental demand. And the majority of properties, you know, they're letting within 2 days. And even if they're brand new off plan, they're still letting very quickly after they've been furnished. And our sister company, Install Direct, they specialize in furnishings. And they've been under, you know, the interesting thing is look at the pressure they've been under from investors and homeowners, with a big jump in demand for both furnishing and decorating jobs. International students are once again a significant driving force in the London market. We didn't see them last year, but this year they were back with a vengeance. There's been a dramatic increase in their numbers. Inquiry levels are exceptionally strong. We're up 300% on the same quarter last year. And most international students come from good families where parents are guarantors and they have good budgets to secure a property. You know, and this shortage of supply that's caused by the massive demand has led to us really short of stock. You know, and now most tenants aren't even bothering to negotiate. They simply pay the asking rent. You know, of course, if the rent has to be in line with market conditions. And in some cases, we're seeing applicants almost fighting with others to secure a home, outbidding each other. And unbelievably, we're seeing gazumping returning to the London market. You know, just last week, we had a flat come to the market, a 1-bedroom flat in Ealing. And we sent it out to our applicants, and we had 24 viewings, 24 viewings in the first 3 hours that we were open, from 9 through to 12. We had 24 people come to see it. I mean, that just shows you what the demand is like. You know, and for tenants who are already in a property looking to renew, we're seeing above inflation increases in rent. You know, this is now the end of the peak season for letting. As we move into the Christmas period, it quietens down. But because of the additional pent-up demand we've seen, we've now had so many inquiries and people still looking to move. So now is still a good time to put your property on the market. There's no doubt, however, that lockdown forced tenants to reevaluate where they want to live. Proximity to green space, you know, that became as important as nearby to transport. High-speed internet, though, is still the top of our tenants' wish list. These trends that I've talked about, more space, outside space, green space, and internet, you know, fast internet, they're going to feature as part of the rental market for a long time. And even though the London market is red hot, as I said at the beginning, it's vital to bear some things in mind to avoid any pitfalls and to benefit from what's going on at the moment. And those 3 tips to a successful investment are meticulous planning. So do your research, on the ground knowledge, and a trusted independent partner. You know, and frankly, we always see ourselves as an independent investor's agent. And this is where we come in. With 60 years experience in the London market, 18 offices throughout London, plus dedicated Japan and China desks dealing with corporates from Japan and China coming to rent in London, and our international offices, including Whittier and her team in Hong Kong. We also have China, Singapore, KL, Dubai, and India. And our focus really is on our clients and ensuring that we're there to help with everything that they need by offering a complete one-stop service. You know, that's from investment advice, where to buy, what to buy. You know, handover and snagging. You're 6,000 miles away. You need someone to go and check the apartments finished the way you would have expected to, because someone needs to check it for you. And you don't have to fly all the way over to do that. We can then arrange the furnishings and refurbishment if it needs any works that you want because it's your home or you want to change anything, we can do that for you. And then we deal with the letting for you, credit referencing tenants. We deal with the property management. So anything that goes wrong in the apartment, we would deal with it for you. And then we even have a tax return service. So we do tax service for our overseas clients. And everything that I've talked about, we do in-house. We try very hard not to subcontract anything so that we never get let down by a subcontractor. And then in turn, we never have to let you, our clients, down or tenants down. But let's not lose sight of what really matters. London has proved time after time it's an extremely resilient market. It's an international hub for business. The city's strong economy, thriving business outlook, and prosperous jobs market are among the reasons people choose to buy, live, and work here. London property is really one of my favorite phrases. It really is a pretty bulletproof investment. It's always been the safe haven, and for long considered one of the world's most trusted asset classes. And with its ability to deliver regular income and long-term capital growth, especially during times of wider uncertainty that we've seen over the last 2 years. You know, when people want to invest their money in a stable asset with low volatility, London property really should be very high on that checklist. But it's still very important to target your investment. Apart from the price and the location, investors need to consider yields, potential for capital growth, whether it's in a regeneration area, and really importantly, the reputation and track record of the developer. Property investment hotspots have been created, especially with Crossrail, which is now called the Elizabeth Line. which is going to really dramatically reduce travel times and increases London's rail capacity by over 10%. You know, and a combination of lower prices, higher yields, and greater capital appreciation mean that we now recommend areas outside of the prime zone 1, with a big focus on regeneration areas, like I mentioned earlier. And regeneration is about creating new places where people will want to work and live. Berkeley Homes, who Finn is going to talk about in a bit, are one of the UK's leading property developers, and they're famous for placemaking and doing just this in regeneration hotspots. And this all translates, you know, you buy into a regeneration scheme, it translates into capital appreciation for an investor. You know, when you buy into the vision, particularly when you buy into early phases. You know, and so this brings me on to our launch today that Finn's going to talk about, our exclusive launch at the Green Quarter. It's a whole new London neighbourhood, and it's being created in the West London Borough of Ealing. It's one of London's most ambitious regeneration projects. It's going to bring a whole new, vibrant new village with restaurants, and I'm sure Finn's going to talk about it, and the travel links, and it gets you into Canary Wharf. Remember, this is out on the side near Heathrow Airport. To get you all the way to Canary Wharf in under 30 minutes is pretty amazing because of the Crossrail connections. You know, I think this really is an excellent opportunity. Regeneration area, fantastic transport links, great developer, and a relatively low entry price. You know, and there's also important to take in mind, there's already evidence of the rentals and the income that's already being generated for investors by the homes that we've already let in the first blocks. We've really experienced exceptional rental demand here, with most well-presented properties let within a very short time, ensuring minimal voids for owners. In fact, we're proud to have done as many lets as we've done. We've done over 40 tenancies in the first 2 blocks. And we're also planning to open, you know, we believe in the project so much, and we're planning to open an office, hopefully on site, to help with the demand. You know, and a really important, I think, proof of our belief in this project is that we're so confident in the Green Quarter becoming the best West London hotspot, that me personally, plus 2 of my co-directors at Benham's, and several of our senior team members have all purchased here, and they've all been let out and asking rent, and most of them within 7 days of completion. And with yields of over 4.5%, coupled with the forecasted capital growth, you know, I really think that's why I bought here. I really think this has all the ingredients of a great investment opportunity. So that's my update on London and my little talk about the Green Quarter. And I'm going to pass over to Finn from Berkeley to talk about, you know, to give a full briefing on the scheme. Thank you very much.
Great. Thank you, Mark. Thanks for handing over. That was a really insightful presentation. If I just step back to so what are we? We're one of London's most significant regeneration projects. So as Mark alluded to, we're a big regeneration development. We are over 100 acres in total, which in terms of Berkeley is Berkeley's second biggest development. In terms of the number of homes being delivered, we're at 3,750. So effectively what we're creating is a whole new place, a whole new town, a whole new environment. Our motto is remarkable by nature. So whilst we have all of that built environment, we're massively focused on the nature element as well. This is a shot just at the end of the park, which I'll take you on after this presentation, I'll take you on a 360 tour, which takes you through the development, and you can see exactly where this location is. But this is this typifies what we're doing in terms of the green elements as well. So I'd say, you know, what makes the development so unique, as I think it's the only one in London where you've got a Crossrail station on one side, you've got 1.2 kilometres of Grand Union Canal on the other, And then within the development, you've got 2 significant parks. And to the other side of the canal, you've got another 90-acre park. So to put that into context, 90 acres is twice the size of Green Park. Locating the Green Quarter. So if you see that black logo that we've got on the left-hand side, that locates the development. As you can see, we're in West London, close to Heathrow Airport. What I think is quite important to note is most of the big regeneration projects are in East London. You know, East London's had a moment after the Olympics. There's lots of the Docklands there, etc. There aren't many opportunities in West London. You know, West London has a more firmly established GDP. There's more wealth in West London. Obviously, the connections to Heathrow Airport and West London generally would deem it to be a kind of more valuable location. West is best, is what they tend to say, and this is a bit of a rare opportunity because big regeneration projects in West London don't sort of come up too often. This is a CGI, so we're looking at the development from Minette Country Park. So just beneath you, the greenery that you see there, that's Minette Country Park, which I mentioned. You can then see the Grand Union Canal. So you've got it's 1.2 kilometres of Grand Union Canal frontage, which will activate. It should be quite exceptional. You know, we'll have barges there with food, beverage, various other bits and pieces. And then within the development, you can see in black, there's 4 neighbourhoods. So we've divided the development up into 4 neighbourhoods. So you've got Parkside, which is where the phases that I'll come on to, which we're selling phases 1 and phases 3, they sit within Parkside. So they're just to the north. This is looking east, by the way, towards the city. They sit to the north of the Central Gardens, which is 4.5 acres. You've then got Courtyard, which is kind of the commercial hub. So that's where all the commercial will sit. So within that, we'll also have a medical centre. Commercial-wise, we're going to have a cinema. We'll have all the food and beverage that you can imagine. So coffee shop, bars, restaurants. And then we're kind of focusing on, you know, what are the essentials? What do people living here need to make this a self-sufficient place? So that comes down to the, you know, things like dry cleaners, things like hairdressers, barbers, coffee shops, all the stuff that makes your life convenient. Also, we're in advanced talks with Marks and Spencer's, who are very keen to take quite a significant store here as well, which is really exciting news. They're very, very keen. Nothing signed as yet, but it's looking very promising, which would be, I think, a fantastic thing for the brand as well, for people to kind of understand what we're building, you know, what we're creating within this village in this small town. You've then got Greenlands, which sits to the south of the wetlands, and Waterside, which will be the final phase. So in total, the project, we're looking at about 20 years. It's quite significant, but we're quite intelligently kind of developing it so that it's lots of kind of small developments almost within a large regeneration project. So it won't feel like you're within a building site. We're very good at that. We've got a lot of experience at that. And then, so we're building it, and we're building it from east, so where Courtyard is, to west towards the canal. And then I should also mention the wetlands as well. So they're 8 acres, which I'll come on to. In terms of the green, I'll come on to our intention and our goals in terms of the green space as well, and what we're looking to do. So the next slide, we've got the connections and Crossrail as well. So key part, which Marc mentioned, Crossrail opening next year. So first half of next year, you know, we've been waiting a long time for this, but eventually, you know, we are here, which is fantastic. I suppose the key stops for us will obviously be Heathrow, which is only 8 minutes away. You can also drive to Heathrow in about 10 minutes. You've then got Bond Street in 17 minutes, and Canary Wharf in 31 minutes. So as Marc mentioned, you could easily commute to Canary Wharf door to door in 40 minutes, which is fantastic. You know, and that's the other side of London. That's way over in East London. So all of the other key London commercial hubs are well within easy commuting distance as well. This slide is just sort of to give you a bit of lifestyle in terms of Ealing, so locating Southall and the Green Quarter within Ealing. So Ealing is a very affluent area. Connectivity into Ealing is about 4 minutes on Crossrail as well, if you want to jump on there and experience a sort of slightly wider retail experience also. Further afield in West London, so you've got Windsor, Kew Gardens, Ascot Races, Wimbledon, Knightsbridge, Westfield, White City, Wembley Stadium. These are all very accessible and quite sort of key locations within London for kind of entertainment and leisure. Employment-wise, so in addition to as I was discussing in terms of the key employment hubs, you've also got Stockley Park. So they've got 23 minutes. You can actually drive that. That's a kind of the slow average. You can actually get there in 13 minutes when it's clear. That's a key employer there. So they've got Apple, Toshiba, Sharp, Nokia, M&S have got an office there as well. And then also worth mentioning is Heathrow. Heathrow is a very big employer, not just of all levels of staff, right up to financial controllers. They employ about 150,000. And then as you can see along that Crossrail line, there's all the kind of key employers that you could imagine, really. I think one that we didn't mention was Liverpool Street, which is 24 minutes. So that takes you into the city, again, with a huge array of employers. In terms of the highlights of the Green Quarter, I'll send this, we'll get this sent over to you guys so you can have a look through yourselves. But there's a lot of kind of key points that we could pull out here. We're planting over 2,500 new trees on the development. When I was talking about the kind of our green aspirations, we're working with London Wildlife Trust, looking to make the Green Quarter the most biodiverse development in the UK. So that means more species of animal and plant life than anywhere else in the UK. And then there's a various other sort of key points that we could put out there, which are kind of, I suppose, what make the Green Quarter quite special and a bit of a unique place. The Berkeley regeneration effect, which I'll come on to shortly, is something that's quite unique, I suppose, to Berkeley. The background to Berkeley, we're the only developer who has the cash pile that we do. So it means that we can take on these significant regeneration projects. We're not reliant on other developers next door having a piece of land, and we're hoping that they'll pull that forward and that will come to fruition. We've never not delivered on any of our projects, or 100% delivery rate. And, you know, it's very common, you know, almost unheard of that we're not on time as well. That's where I think, you know, we're unlike most other developers. We can take big places, you know, big developments, big parcels of land. If you look at Royal Arsenal Riverside in Woolwich and what's happened there, Kidbrooke Village in East London and what's happened, South East London, what's happened there, and Woodbury Downs, you get a significant capital appreciation because we take these sites in locations where, you know, there's not as much affluency, but we have the scale to create a whole new place, and that's where you see significant capital appreciation. So that's, as I was alluding to, the regeneration and the Berkeley effect of what we do, increased capital, increased growth and pricing. This just signifies, on this slide, actually gives some examples. So on the left-hand side at Royal Arsenal Riverside, you can see the prices in Woolwich in yellow. Then you can see the average prices in Royal Arsenal Riverside, which is kind of pink. And then the top line are the wider prices in Greenwich. So down the bottom in yellow, you saw the growth in Woolwich was reasonably subdued from kind of, well, 2010 to 2018. And then the kind of pink line, which was Royal Arsenal Riverside, you can see the significant capital appreciation, far greater than those in Woolwich, and coming from the kind of Woolwich level right up to the wider Greenwich level over those 8 years. And then you can see the growth in Greenwich. So what we predict, I think quite reasonably, is that we'll see a similar kind of effect here with the Green Quarter relative to Southall, and then also relative to the wider Ealing prices. So if you imagine the Southall prices would be in yellow, the Green Quarter prices would be in pink, and then the top lines would be the wider Ealing prices. So we expect to kind of bridge that gap quite quickly. Then Kidbrooke Village, you can see in the middle there. So you've got the prices of Manhattan's 1 beds, 2 beds, and 3 beds, and significant uplifts. So you kind of look at the 1 beds, for example, which was sub 200, and then they're up to 400k over those 8 years as well. And then Woodbury Downs, you just got historic price growth for 1 beds also. So as you can see, 96.4% there on another Berkeley region in 6 years, which is obviously very significant. This just signifies what we were talking about previously with Southall versus Ealing. Sorry, the price growth in Southall versus Ealing. So more significant, a lot more upside in Southall than probably the wider Ealing location, which is a lot more developed and gentrified already. We've then got a kind of 10 reasons to buy, which I'll skip through because we've kind of covered a lot of these points as we've gone. So as I mentioned, London, one of London's most significant regeneration projects. The main triangle of the site is 88 acres. Then if you add on the western access and the eastern access, which I'll come on to shortly, we're over 100 acres. Remarkable by nature, as I mentioned, this is our motto, of working with London Wildlife Trust to create the most biodiverse development in the UK. Residence amenities, now these are a key point. So in addition to Crossrail coming in next year, we've also got our first residence amenities coming as well. You can see, so that's the plan there. So we'll have quite a nice kind of lobby space with a coffee bar and concierge in there also. I'll show you some CGI shortly. And then we've got a lounge and co-working space in addition to a gym and a studio space. Further down the line, so in 2025, these amenities will move, and we'll also add on swimming pool, jacuzzi, steam room, as well as a screening room as well. So then we'll have the all bells and whistles. And I'll come on to the service charge. This all comes at a very, very, very reasonable service charge. We're probably the best in the business at keeping the service charge at a reasonable level, but delivering a very high level of amenity. So that's a shot of those resident amenities, which I just mentioned. So you've got the concierge sat there on the right-hand side, and then this kind of open space for residents and a coffee bar in there as well. So this is opposite this is across the park from phase 3, which I'll show you shortly. Connectivity, which I think we've discussed quite well. The big, when Crossrail becomes a reality, it's a game changer. At the moment, people talk about it, and I think it's only when you actually get people moving in and they can commute from that location that you really see that actual effect. Berkeley regeneration effect, have we spoken about? This CGI on the left is at the bottom of Central Gardens, sat next to the canal. So you can see what I was talking about in terms of activating that space and creating a really smart environment. Ealing leading investment. So the GDP of Ealing is 10.5 billion. West London has a very significant GDP. You've got M4 corridor, in addition to what I was talking about earlier, in terms of Stockley Business Park and Heathrow. You've got the M4 corridor, which is a big hub, a big employer as well. Employment opportunities, which we've already mentioned, so Stockley Park and Heathrow Airport, which has over 114,000 employees. Education opportunities, so this is this is what we have at the moment in terms of driving. We've got another slide in our brochure which provides the times to the educational institutions with Crossrail in, so that's even more significant as well. And then a new community which we're really passionate about, and we're already seeing being delivered at the moment. So, you know, people coming together, having these spaces. We've got provision for outdoor cinema all the way along the park as well. We've got power points, we've got water points, so we can have farmers markets, all that sort of stuff. That's all being put into place now, and is a big sort of target for us. We're also putting in some meanwhile use. So a coffee shop is coming in at the end of this week, next door to the marketing suite and opposite the Crossrail station. And then we'll be building on that progressively throughout next year to, as I said, make the Green Quarter completely self-sufficient. And then a really key one, Berkeley quality, which I don't know, how aware the audience are, but we've got a very, very good reputation, understandably. I've worked for a number of developers, and I know Berkeley are the only business who snag an apartment to the nth degree to ensure that the quality is there, and then when it's handed over, it's right, as well as we can do. We've got the best NPS score amongst the business as well. Looking at the homes, so this is in phase 3. So phase 3 Parkside, as I mentioned, and then to the right hand side of that, you've got phase 1. So this just maps out the development. So you can see the central gardens, and you can see the wetlands as well. Minute Country Park to the left hand side, and then on the right hand side, you've got the marketing suite where I am now. We'll be here if you guys need to talk to anyone over here. We can get you on video call, show you around the marketing suite live. That's absolutely fine. So you can see that on the right hand side of the Crossrail station there as well. This is Parkside. So we're looking at 2 phases effectively. We're looking at phase 1, which is completed now, and we've got the last block completing in January, where we've got 2 beds and 3 beds. So 2 beds from 470,000, 480,000, and then 3 beds from 677,500. And then we've got phase 3 Parkside, and more specifically the Harris, which is the building on the right hand side. So there are 84 apartments in there. 1 beds from 417,500, 2 beds from 470,000, and they start to complete from the start of 2024. So there's a bit more of a lead time. But I think from this, you can also get an understanding of the level of the architecture and design that we've put, how far we've gone to ensure that this building and this development really stands out. And on the next slide, so the accommodation mix, as I mentioned, 36 1-beds and 48 2-beds in the Harris, which is 84 units in total. Interiors wise, you can see here that we've kind of gone for boutique hotel style. So you can see that it's kind of quite cool bespoke tiles, the matte black brassware. We worked the interior design company who we used for this design a lot of hotels. You've got the cool pendant lights as well. So I think this will be really stand out. In a lot of developments you get the kind of the beige aesthetic, but we're really trying to steer away from that and do something quite cool. And there's one of the kitchens as well. This is one of the options. You can have the blossom or the pink splashback. We can have the green one. There's a shot of the living room. So all of the apartments have outside space. All of them have balconies. That's a shot of the bedroom as well. So one of the bedrooms, you can see this quite plush carpets that we've got in there. And then also the wardrobes are kind of bespoke designed, quite smart, I think. And then we come on to a few floor plans just to give you an idea. So this is one of the smaller 1-beds, 514 square feet. They're all quite efficient apartments, so there's not much wasted space within them at all, if any. And the same here, kind of, you walk in and immediately you've got that openness and you've got that view out and you've got that light coming in. So again, very efficient units and making the most of the space. So they do feel light and airy. And then you've got a 2-bed, one of the smaller 2-bed, 1 bath there, which again, as I mentioned, start at 470,000, and also quite a nice efficient unit. Onto some of the details. So these are leasehold, they're 999-year leases, so as good as a freehold. You can buy a right to park with 2 beds for 20,000. That's also for the life of the lease. As I mentioned, service charge, extremely good value, estimated at £3.75 per square foot per annum. I mean, if you stack up kind of what we're lucky because we've got this scale, the economies mean that we can get to a really reasonable level of service charge. Whereas, for what we're delivering, the amenity level, which you'd expect in a 4 or 5 star hotel, in most developments, you'd be paying at least double that. So I think there's exceptionally good value, kind of whether you're looking to live or also the value that has for your tenants when you're renting as well. And then ground rents, you've got there £300 to £350 per annum. Reservation fee is just £2,000. Deposit structure is typically 10% on exchange, 10% 6 months later, additional 5% 6 months after that, and then 75% on completion. For this event, we have agreed to allow 10% on exchange. Then we could do 5% after 6 months, another 5% 6 months after that, and then 80% on completion. So we can do something a bit more interesting on that. And now what I'll do is I just want to switch over to our 360 fly through. And with that, what I can do is show you or take you on a bit of a tour, as if we were working or moving from where I'm located now in the marketing suite, right the way through the development and across into the wetlands. So we've got this on an app which we can provide access to you guys as well, and Benham and Reeves can, and it will be at the exhibition. We hope to see as many of you at the exhibition as possible. But here we go. So we start here. So this is where I am at the moment. This is the brand new Crossrail station, which I'm glad to say looks a lot like it does in this CGI. And across here is the marketing suite. We rebranded from Southall Waterside last year. The reason we did that is that brand had been around for quite a while. And we kind of took a step back and said, hang on, instead of having a generic name, what is it actually? What's the essence of what we're doing? And as I mentioned, with our working with London Wildlife Trust to make it the most biodiverse development in the UK, with 2 new parks and with all the waterway running through it, and also being adjacent to Minette Country Park, which we're investing £1.8 million in. The green element really shone. So that's when we kind of had a rebrand, which I think is a better reflection of our aspirations. So this is a space here which we own. We're activating this, so we'll have a coffee cart on here very soon. This isn't complete as yet, but it will be first half of next year. This road is complete that you can see though. Behind there is a water tower. So this is a listed water tower. We did try to buy this actually, but they wouldn't sell, unfortunately. But it's still quite a nice kind of landmark to have. You can see it to signify kind of the start of the development. And then if you skip through, we get to our first square. I call this Arrival Square. We haven't formally named it yet. And then if you look here, we've got quite a cool, significant pub. We have some very good connections with some of the biggest brewers who are usually very keen or are very keen to take pub spaces off us, understandably. And then if you look through here, this is what I call the retail walkway. And on the ground floor, you've got these small, so more viable kind of commercial units, which I was talking about. So hairdressers, barbers, dry cleaners, coffee shop, etc. So they'll be on the ground floor, and then on the first floor there, these are almost in kind of box park style units, if anyone's aware of box park. And then on the top floor, you've got some office space as well. So that's most likely to be quite a nice sort of co-working space. And then you come through to the main town square. So this is 50 meters by 50 meters. So quite a big square, retail or commercial on the ground floor, food and beverage for your kind of alfresco dining. And as I mentioned, this phase is kind of it's called Courtyard, and it takes its cues from the meatpacking district in New York, Shoreditch, it's kind of warehouse style. So you can see you've got the bolt-on balconies and quite a nice design, quite a nice architecture and identity. And then underneath, this will be the first building in Courtyard, and underneath that is where the permanent amenities will be, which I mentioned earlier. Now what I'll do is I'll skip halfway along the park, so to outside phase 3. So it looks like we've improved the architecture slightly. This is a slightly outdated, but there's not much difference. And then I'm skipping around, and then you can look. This is looking down the park, so you get a feel for kind of what we're doing with the landscaping. We invest typically, and especially here, very, very heavily in landscaping. We know that adds significant value to a place. And, I think with everyone being conscious of mental health and wanting to be outside with COVID, it's become more and more important to have these spaces. So we're really working hard to make them quite special. And this is the shot which I mentioned to you guys earlier at the end of the park. And you've almost got these kind of walkways, islands, which are joined by these kind of walkways, and then behind there you've got the Grand Union Canal, and we've got this wild cafe. So we've already delivered the first phase of the park. Second phase is getting delivered next year, so we're bringing it online very quickly. And then I'll skip to the wetlands as well. So this is coming in sooner than the buildings around it as well. This is even more informal. It's kind of meadowy. So you've got this boardwalk, these really nice timber walkways, which weave through, and then you've got water on either side. But we're keeping it natural, keeping it meadowy. We think it's a nice environment. I think people want that natural kind of feel to green spaces now, and also it's less costly to maintain, which is good for us and good for people paying the service charge, the owners like you guys. And then skipping through there, you can see as this just carries on, and then finally we get to this part where you're kind of sat next to a lock, and again behind there you've got the Grand Union Canal as well. So that's it from me. It's been a pleasure presenting to you guys. We look forward to seeing as many of you as possible at the event, but if not, we look forward to hearing from you. Hopefully, if you've got any questions at the end or even beyond that as well. But from my perspective, working in development for a long time, the reason I took on this role to work on this project was because it is something quite special. And as I said, it's unique to have what we're doing within this place and being able to create a whole new place, in its own, as well as having a very significant park. One side, the Grand Union Canal, and then a Crossrail station is quite unique. So thank you for your time. Next up, I'll hand over to Marion from Capricorn, who will go and take you through some of the finance options.
Absolutely, yes. Hello, everyone. Good evening, Hong Kong. So yes, I will talk to you about the UK mortgages. I'll kind of breeze through it really. Obviously, mortgages are quite a personal / tailored product. So obviously, it's not a one-size-fits-all, but I'm going to run you through the very basics. Right, let me just make sure I can go next. There we go. So a bit about us, about Capricorn. So we are actually a London company. We opened in 2005, and we're now the largest independent mortgage brokerage in London. We work alongside Barclay and Benham Reeves. We've worked alongside them for many years now, and we have access to the whole of market. What that means is we've got access to all the banks and lenders that lend on UK property. We have our offices. The main one is in London, of course, but we've got the Hong Kong one, which is myself and a colleague of mine, and we've got Singapore. And we have three parts to the business, to the company itself. We've got the international proposition. So these are the kind of the lenders that lend to people based overseas, like in Hong Kong or anywhere else in the world, really. We've got the private clients, which are private banks we have access to for any large loans above £1 million. And we've got Capricorn Commercial, which gives us access to even more lenders when it comes to a bit more specialist lending, whether it's a limited company, buy-to-let, or many other options. Now, we are regulated by the FCA, that's the Financial Conduct Authority. So any of our advice is heavily regulated and scrutinized in the UK, which is good for you. So the product wheel is, to be honest, is just a very, very simple, colorful product proposition that we have. Some of the banks you've seen before. If you look at the bottom left, you've got the likes of Skipton, Bank of China, Barclays, HSBC, the standard lenders that lend to UK property and overseas nationals. We've got private banks on top right and some of the high street banks on the top left. But of course, there's a lot more. You can't really fit 150 onto one page, unfortunately. And I'm going to give you some basic terms and rates and fees, simply because, as I said earlier, it really depends on each person's situation. Now, at the moment, as Marc mentioned earlier, the Bank of England base rate is still at 0.1. It was reviewed about 2 weeks ago. It was kept at 0.1, despite the rumours that the rates were going to go up, which is great. That means the rates, the kind of mortgage rates should still be, well, they are at the moment as low as ever. And of course, you can go up to 75% loan to value is available for overseas buyers. The interest rates are more or less between 2% and 4.5%. That's for a buy-to-let. Of course, 2% will be more around the high street lenders or some of the private banks. Oh, that's gone a little bit. I don't know what happened, but if we can, just go back. A bit more. There we go. Yeah. So, of course, the lower the rate, the easier it is, the situation of the person, and the more straightforward it is. If anyone's looking at, let's say the income situation is a bit more complicated or difficult to show, then you've got a rate of 4 to 4.5%, which is still not bad given, and I'll show you a calculation later on. Now, many people do come to me and say they want to move to the UK and move to the Green Quarter, which is amazing. That makes sense. Now, that's called a residential mortgage. A residential mortgage has different criteria, different compliance, really, and different regulation to a buy-to-let. The rates are indeed cheaper, but of course, in order to prove that you're moving to London, you need to show that obviously your income or your job is moving you there, or something along those lines, or let's say son and daughter are in London going to university, something along those lines. That's absolutely fine, and those rates are much lower than a buy-to-let. Now, truth is, the more deposit you put down, of course, more than 25%, let's say you put down 40, 50%, there are more products and there are lower rates available. That makes sense. And the maximum loan tenor can be up to 30, 35 years, depending on age, of course. For buy-to-let, it's a bit more flexible. The only reason is because the property is then considered self-financing, so it makes its own money to pay off the mortgage. Hence, the retirement age of the borrower is sometimes not that important, which is good to know. And probably the most kind of interesting or exciting thing, if anything could be exciting about mortgages, is the fact that interest only is available in the UK. Now, interest only is something that's not available in Hong Kong, and many people don't know about it, but this is the most popular option for investors and for buy-to-let borrowers. This allows you to pay off just the interest to your loan, which means very low monthly payments. You are allowed to make overpayments and pay off your capital whenever you want. The rates and the terms are still the same. So actually you get a positive cash flow per month I've got an example later on, which I will, of course, show you. Right, moving to the next. I'm not sure if, there we go, fine. Documents for underwriting. Now, they are actually quite simple documents. Different banks ask for different, different amounts of documentation, should we say, and paperwork. But the main ones are the ones here. So the proof of identity, of course, that's just a passport. Proof of address could be anything from a bank statement to a utility bill. Source of deposit, very important to show where the money has come from for the deposit, whether it's a gift, whether it's savings. It just needs to be shown that how it's been accumulated. That shouldn't be too much of an issue. Proof of income, of course, pay slips if you're employed, tax returns if you are self-employed, usually for 2 to 3 years of tax returns if you own your own business. For if you're employed by a large corporation, let's say something like KPMG, then of course you can provide the last 3 pay slips, nice and simple. Bank and credit card statements to show your conduct of your accounts and making sure that you actually do receive your income into your bank account. Sometimes they ask for a credit report. Now, the TU, or the TransUnion in Hong Kong, many people do ask me whether it's an important part. The credit report is simply to make sure that you've maintained your loan payments in Hong Kong, if you have any, or mortgages. Usually, the lending in the UK will not appear on your TU report in Hong Kong. So that's good to know. Moving on. Right, the application process. Now, of course, I'm more than happy to meet everyone in person, and this is how we usually do it. We'll meet for an hour. My office is in Central. I'll also be there at the weekend, by the way, at the event. We will meet. I will go through the whole process and take the basic details that I need from you, and then I can assess your financial position and recommend some lenders and some products. Usually the approval in principle can be done within a day or 2, depending on the time difference and when it actually happens. But that's the initial go ahead from the bank. And then once we are happy with everything, we've got the agreement in principle, we can submit the application. And all these documents I just listed previously can be emailed to me. I can certify everything. And then we can start the underwriting process with the bank. Underwriting process takes about, let's say, 4 to 6 weeks, depending on the bank. Of course, generally speaking, you start the mortgage process about 6 months before estimated completion of your unit, so that the bank can actually go and survey the property, value the property, make sure the value stacks up and give you a rental estimate, of course. And then once everything is done and underwritten on the property side and on your side, the mortgage offer will be issued. Once the mortgage offer gets issued, you can relax, more or less, because it's just a matter of time for the legal work to be done, and then you can get the keys to your new flat. Now, like I said, 4 to 6 weeks is the kind of process on the mortgage side. And the mortgage offer is usually valid for 3 to 6 months. So depending on your situation, we can time the application adequately. And then, as I said, the solicitor is then doing all the work to make sure completion happens and the funds are released by the bank. Cool. Moving on. Just a little kind of examples or success stories, as we like to call them. Now, imagine top left corner, global multinational relocation. As I mentioned KPMG earlier, I'm going to keep on using that example. Let's say you move for work, your company's moved you to the London offices, happy days. You can prove that you've got a contract in the UK. The bank is happy with that. They know you're moving into the property. We can crack on with submitting an application and getting a mortgage offer at a residential low rate. That's an actual rate, 2-year fixed at 1.14 that recently we managed to secure. Really, really good. But of course, we need to prove that you'll be using the property for residential purposes for you or family. Now, on the right, the London investment property. Now, investment, of course, kind of stipulates, we're doing a buy to let really in this case. So that means you're letting it out to someone you don't know. It's not a family member, and you can go up to the likes of 75% on it, which is the max, as we mentioned. You can do a 3.24 on any loans above 500,000 or 3.74 below 500,000. That's true. Usually, the more you borrow, the cheaper the rates are. That's kind of how the banks do it in the UK. But yes, that's a really, really good rate. And you're still getting, you can do that on interest only. So monthly payments will turn out to be quite quite reasonable, definitely much cheaper than the rent you'll be receiving. Another option, and many people have asked me that before, let's say you buy the property now, it completes in, as we mentioned earlier, 2024. You want to let it out for 1 year. But then when you move to the UK, if you do move to the UK in the future, you want to change it to a residential. Absolutely fine. You can do a buy-to-let, 60% on a 3-year option, 3-year tracker rate at 2.49. In 3 years' time, let's say you move to the UK, stay there, you can change it to a residential mortgage, and that's a refinance. So the refinance rate is sometimes cheaper. It's a remortgage, so you're replacing one mortgage with another. Recently, we had a rate of 0.87, which was secured, which is really, really good. Of course, for that, you might have to be earning money in the UK and have some credit history in the UK, but absolutely doable. Yeah, thank you. Next, please. Right, example rate. So this is real. This is as of yesterday. 2 beds in the Green Quarter, 502,500. Mortgage requirement 70%, just to keep things, nice and simple to calculate. £351,000 borrowing, 5-year fix at 3.74. This is a real rate, and it's actually quite accessible. It's quite a quick process there with that lender, and it's one of the best 5-year fixed rates. What that means is for the next 5 years, you don't need to worry about your monthly payments. They are going to remain at 3.74 rate, and they're going to remain at £1,096 for the 5 years. Some people like that because sometimes tracker rates, they fluctuate. So many people like to just not worry about their investment for the next 5 years. Absolutely fine. And then your gross monthly rent will be about £1,600, so £1,600. Really, really good. So you can see there's a 500 buffer there to cover your service charge and management fees, which is you can have a positive cash flow in the end. The lender's arrangement fee is also a flat one, which is about £3,000. Some banks charge a percentage, like 1% of the loan. Others charge a flat one, but as you can see in this case, a flat one is cheaper than 1%. So it's not bad at all. And it's a nice unit 2-bed where you've got 2 similar sized rooms, which will rent out very quickly, and that rental value does look absolutely realistic and perfect for 2 people wanting to share. Cool. Next, please. Yeah, I mean, don't be shy. Feel free to scan the QR code. What this will do is it's going to ask 2 or 3 simple questions, and it's going to come to my side. I will then see it and basically be able to contact you, speak to you, meet you in our office, and everything. It's basically a bit high-tech, new kind of thing we have. So feel free to do it. I am there at the weekend, so grab me, speak to me, and we can always arrange a one-to-one private conversation. Cool. And I think that's it for me. Of course, feel free to ask any questions. I think I'll pass it back to Widya now with any Q&A. Thank you.
Thank you to all of the speakers. You all have given such a detailed presentation on the core topics that you were handling today. And I believe going through the questions that have been submitted before and during the webinar, a lot has been covered by the speakers today, and I'm conscious of time. I know it's dinner time for many of you, so I am selecting some very unique questions which I think would benefit all of the audience here. We'll start off with Marion, for the financing questions, because you've just finished your presentation. So we have one gentleman who's asked, how to apply release equity from current London properties? Is interest-only scheme available to foreign investor?
Absolutely. I mean, that's it's very, very common to be releasing equity on existing properties or even a portfolio of properties, maybe not one, maybe 3, 4 properties. You can do interest only. And in fact, there's more options than a first-time purchase because you're already a landlord in the UK, meaning you have credit history in the UK, meaning you can prove track record of renting out the property. So actually, it's a much easier process. The main question the banks will ask is, what is the reason for you to take money out of your property? And, are you reinvesting it? Are you using it to start a business, whatever? The most important thing is that they know where the money's going to be reinvested. If you're buying another property or putting it down as a deposit of another property, perfect. So absolutely, interest only is available. Actually, interest only is available on any buy-to-let, whether it's a refinance or a purchase. So I hope that's clear. It's actually a simpler process.
Thank you. Another question on financing. I am a Hong Kong BNO and will be moving to London soon. I will buy a property for my own use and a second one as a buy-to-let for income. And while I look for employment later, is it possible to get a loan even when you are unemployed, and at what rates?
Absolutely. I mean, I was talking about the rates earlier. So of course, if someone at the moment has left their job, or or at the moment they can't prove income, let's say the business has just started or something along those lines, a buy-to-let mortgage is actually calculated not so much on your income, it's calculated on the rental value of the property. So although some banks like HSBC, they will ask for a minimum income of the client, others will not. Of course, you might be paying a 4% plus rate, but of course, you're not paying that forever. You will be able to refinance that rate once you do find a job or once you do move to the UK, because then you'll be considered a UK domiciled borrower and you have access to the local banks. So to be honest, yes, you don't need to worry about it. Even if you're out of job, you can get a buy-to-let mortgage. It's going to be a self-financing property. And then when you do live in the UK and find your job there, happy days, you can just change to a residential mortgage. If you want to buy another one or change the buy-to-let to a residential, it will be much, much simpler at that point.
Okay, now everyone has been talking about the Elizabeth line. That's a question about what is the update on the actual opening of the Elizabeth line, and what is the opinion on the immediate impact of property price when the line is fully operational. Perhaps, Marc, would you like to take on this question?
I don't know when it's going to open. I was going to suggest, Finn, you must know. Finn, when's it going to open? Finn? He can't. Is he muted?
Sorry, yeah. So I think the most recent update was the first half of next year. And they haven't moved on that. So what tends to happen is as they shift it back, if they get within a quarter or 2 quarters and it doesn't look likely, then they'll push it back again. So we're all sort of sat here with fingers crossed that it is happening. And if you go along, if you go to the stations, the various stations, some of which sit on Berkeley developments, including ours, you can see, all of those that should be in place are effectively in place. So that's very promising. The trains are running on the line as well, on part of the line. So the line from Southall into Paddington, we've got the Crossrail trains on that line, but at the moment they're not running through from Paddington into central London. So from all the indications we've had, it is still the first half of next year.
Yeah, I'm going to, funny enough, I'm going after this, I'm going to Bond Street, and apparently they'd had a problem with the line there. It was something, that's why it's held up so long. That's what I'd heard, but fingers crossed it's going to be next year, but we know it's coming. And I think that's the key thing that will help capital values. And interesting enough, just touching on Crossrail is, I think there was a lot of talk about it and a lot of overseas investors rushed in and bought into Crossrail related areas, Reading, Southall, Ealing, going all the way out on the other way to Brentford and stuff, Brentwood. But I think actually it's been forgotten about because it's been on for so long now that people are now thinking, I don't know when it's going to come, if it's going to come. And so actually, I think it's not even taken into account now. And I genuinely think when it opens, there's going to be this big boom because the Northern Line extension, that's open now, and the stations that there are opening, and Crossrail is only a matter of time, but it's such a massive project. So I think you're going to see good capital values start to move. The other question was about where values are going to go. This year's been obviously incredibly strong for the reasons that I said. My prediction is that next year we're going to see a very strong first quarter. I'm sure Marion's got views on the interest rate. I think we will see an interest rate increase, but let's be honest, in Asia, you're tending to pay 3 to 4%. And in the UK, we pay 1.5 to 2%. And so therefore, a small interest rate, even as much as 1%, and I would be shocked if our new governor puts it up by more than 1%. I think that would be shocking. I don't think that will have an effect because these are small incremental increases in the loan to value, and I don't think that'll be totally passed on the fixed rates that a lot of people have signed up. So I think my prediction is we're going to see 5% capital growth in the next 12 months. I see everybody else is kind of saying the same. Savills, Knight Frank, CBRE are all in the same kind of area I am. You know, I think there is going to be some growth, and I think different areas, different pockets will see more, but regeneration areas are the ones that you see that extra growth that isn't accounted within the rest of the market. Lydia?
Thank you so much, Mark, for that. Oops, there you go. The next question is for Finn on the development. It's an amazing development with mixed development. Do you know other businesses, what businesses that you intend to bring on site in terms of the commercial elements at the Green Quarter?
Yeah, so the initial key one, as I mentioned, is for the grocery store. We have got interest from Amazon Fresh, very keen. We've got interest from Co-op. We've got interest from, and then the strong, I think it's Sainsbury's as well, sorry. And then the very, very strong interest in our sort of front runner for us is Marks and Spencer's. As I said, that's the kind of brand that we want to align to. It's aspirational, it's high quality, etc. Aside from that, we want to bring in independents, but kind of independents who are already established with sort of 2 or 3 outlets. So we don't really necessarily want, you know, a Starbucks, for example. We could do that. I think that's probably always an option, but we'd rather have a high quality, more independent kind of boutique feel to what we're doing. The pub, as I mentioned, we've got strong ties with a couple of the most significant brewers. I mean, if you go along to a number of Berkeley developments, you'll see that we have pretty cool Young's pubs there as well. So there'd definitely be someone who'd be bidding for the pub, as an example. Someone just said, how big a shop will Marks and Spencer's be? So Marks and Spencer's, they want to take a 17,000 square foot store. So they're not looking to take, so the smaller stores that you get, which have the more lenient trading licenses, I think can go up to about 2,800, which cater for all your needs, but this will go kind of beyond that. It will be a significant store. The reason behind that is Marks and Spencer's missed out on a number of Berkeley developments. They kind of came in late to the party. For example, at Royal Arsenal, where they're trading extremely well. So they kind of now know that, you know, they need to get in early. They want to get in early and secure that. So yeah, so that hopefully that answers, I think, like the kind of key, the key sort of cornerstones of the commercial will probably be quite big names. But then I think we'll have it mixed in. You know, we're also looking at having a craft brewer as well, for example. So a cool little craft brewery sat behind that building, which I was talking to you about, where the temporary amenities will be. We've got an ideal space for a craft brewer in there. So yes, I'd say it's kind of a mixture of the reliable, bigger sort of businesses alongside more of the kind of independent, boutique businesses where you probably get to know the person who runs the coffee shop and that sort of stuff, which we really like.
Mm-hmm. Thank you for that. I do have to apologize, but we have run into our hour. A lot of you have asked questions. Not to worry, because our webinar will be posted on our website at benhams.com by tomorrow, and we will be sharing the slides as well. And for those who have asked questions, thank you very much. I will make sure that our sales team will be in touch to basically go through all of your queries. And if you are in Hong Kong, please don't be shy. Register to meet us this weekend at the Berkeley Group Hong Kong office. And we will be there to support and advise you the best possible. I myself am a big fan of regeneration. I have invested early in Berkeley Group schemes, where it's a regeneration plan. So I would love to also share my experience with you. So click on to the QR code, scan the QR code to register for your appointment slot this weekend. With that, again, I'd like to thank all of the speakers today and for all of you for your patience and interest in our development. We'll see you soon. Thank you very much for attending.
Thank you.